For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Investors have long favored focusing on high-growth companies as a popular approach to achieving substantial returns. Two clear representations of this are Palantir and Archer Aviation. Palantir is a leader in data analytics and artificial intelligence, while Archer Aviation is breaking ground in the electric vertical takeoff and landing aircraft sector. Each is considered transformative in its respective domain, and both have rewarded shareholders handsomely over the past year. Billionaire investor Israel Englander is no stranger to recognizing and capitalizing on growth opportunities. Back in the year 1989, he established Millennium Management with an initial capital of $35 million. Today, Millennium oversees a massive $73 billion in assets and employs more than 6,200 people worldwide. Englander himself has amassed a personal net worth of $14.2 billion, an achievement that growth-focused investors are sure to admire. Among the many investments in his extensive portfolio, both Palantir and Archer Aviation hold a place. However, during the first quarter of this year, Englander appeared to favor one over the other. He significantly increased his stake in one while reducing his position in the other. Let's begin by diving into Palantir, a name that has become practically synonymous with recent bull market trends thanks to its remarkable performance and steady expansion. Established in 2003, Palantir is a software enterprise that excels in analyzing large-scale data through artificial intelligence. Its journey began by serving American intelligence agencies via its Gotham platform. Later, the company ventured into the private sector through its Foundry platform. Then, in the year 2023, Palantir took another leap forward by introducing the Artificial Intelligence Platform, often abbreviated as AIP. This platform integrates large language models within private and secure systems, allowing real-time artificial intelligence-powered decision-making across various sectors, including defense and public health. The rollout of AIP sparked both substantial real-world business expansion and a significant increase in the company's stock price. A closer look at Palantir's latest financial performance during quarter 1 of 2025 provides a glimpse of this momentum. During this period, revenue climbed by over 39% year over year, reaching $883.85 million, surpassing analyst predictions by almost $22 million. The growth was primarily driven by an impressive 71% jump in commercial revenue from the United States, totaling $255 million. Additionally, government-related revenue in the United States rose by 45%, reaching $373 million. When it comes to the entire year's outlook, Palantir slightly increased its revenue guidance. The company now anticipates total revenue to land between $3.89 billion and $3.9 billion, up from the earlier forecast that ranged from $3.74 billion to $3.76 billion. Meanwhile, the consensus estimate previously stood at $3.75 billion. From a market performance standpoint, Palantir's stock price has seen explosive gains. Over the past 12 months, its share price has surged by 482%, leaving broader market benchmarks in the dust. Despite the impressive performance, some analysts have raised concerns that the stock's valuation may no longer be sustainable. However, this concern does not appear to apply to Englander, who boosted his holdings by an astonishing 303% in quarter 1. He acquired an additional 986,457 shares, bringing the total value of his position to over $124.6 million. Englander is not alone in his bullish stance. Mariana Perez Mora, an analyst at Bank of America who ranks within the top 1% of Wall Street stock experts, shares a similarly optimistic view on Palantir's future. She emphasized that Palantir offers more than the standard artificial intelligence services commonly seen across the market. According to her, many companies boast about artificial intelligence-related initiatives, but these often amount to nothing more than superficial adaptations of tools like ChatGPT. In contrast, Palantir is recognized for its purpose-built outcome-driven artificial intelligence products that operate on a large scale. She sees Palantir as the benchmark for how organizations should implement artificial intelligence to produce real, measurable results. Standing by her positive assessment, Perez Mora has assigned Palantir a buy rating, along with a price target of $150 per share. This implies a potential gain of approximately 19% from current price levels. Still, it's important to note that her stance is more optimistic than that of many other others in the financial community. Overall, Wall Street analysts remain relatively reserved, with 11 maintaining hold ratings, 4 suggesting a sell, and only 3 advocating a buy. The consensus price target stands at $100.13, which actually suggests a possible downside of roughly 21% over the next year. Now let's shift gears from one growth-focused company to another, although this next contender is operating in a completely different arena. While Palantir Technologies is deeply rooted in artificial intelligence and data analytics, Archer Aviation is breaking ground in a futuristic space that still feels like something out of a science fiction movie. More specifically, the company is advancing electric vertical takeoff and landing aircraft, or eVTOLs. Unlike Palantir, however, Archer remains in a stage where it has yet to generate any revenue. That early stage status may be nearing its end. Archer is making tangible progress toward launching its commercial operations and has laid out a detailed pathway for achieving this transformation. The company's primary focus is its Midnight aircraft, an electric air taxi with 5 seats. This vehicle has been engineered to travel close to 100 miles per trip at speeds of up to 150 miles per hour. Archer is aiming to secure certification from the United States Federal Aviation Administration toward the end of the year 2025. According to company updates, piloted operations could begin soon thereafter. Archer has already completed construction of a large-scale manufacturing facility in Covington, Georgia. That plant is expected to become operational within this year and is set to scale up production to as many as 650 aircraft annually by the year 2030. While Archer is working toward future operations, the company already has a number of high-profile initiatives underway. It has been selected as the exclusive provider of air taxi services for the Los Angeles 2028 Olympic and Paralympic Games. Additionally, it is collaborating with United Airlines to create a shuttle route between Manhattan and area airports. On top of that, Archer plans to deliver its first Midnight aircraft to Abu Dhabi this summer, leading into a wider rollout across the United Arab Emirates for its limited launch edition clients, including Abu Dhabi Aviation and Ethiopian Airlines. With foundational routes in place, production lines nearing completion, and regulatory objectives being met on schedule, Archer anticipates initiating limited passenger services by the year 2026. From there, the company plans to quickly ramp up its operations once it receives full certification from the United States Federal Aviation Administration. Further strengthening its long-term outlook, Archer has also formed an exclusive collaboration with Anduril Industries, a defense technology company. Together, they will design a hybrid propulsion vertical takeoff and landing aircraft for the United States Department of Defense. This dual-use development could have commercial applications as well, offering the potential for expansion in both civilian and military markets. Given this combination of industrial progress, strategic partnerships, and growing public sector involvement, it's no surprise that investor interest in Archer has surged. The company's stock has soared by over 204% during the past 12 months. Still, not everyone is convinced that the momentum can continue unchecked. Billionaire investor Israel Englander has opted to scale back his exposure to Archer, selling more than 3,400,000 shares during the first quarter, an action that reduced his position by 68%. In parallel, financial analyst Bill Peterson remains neutral in his evaluation. He points out that while the defense-oriented hybrid aircraft could find relevance in both military and civilian segments, delays in certification and unpredictable consumer uptake may limit near-term growth. Additionally, he highlights that Archer's Georgia facility has the capacity to accommodate production for both commercial and defense use cases, providing flexibility as market demands evolve. Peterson emphasized that Archer's production strategy is likely to stay conservative over the next couple of years, with a gradual increase in volume beginning around 2027 as the company gains operational efficiency. Based on his forecast, he assigned a neutral rating to the stock and established a price target of $9, suggesting a potential decline of approximately 20% from current levels. However, Peterson's cautious tone is not echoed by the broader investment community. Out of all analysts covering the stock, 6 have issued a buy recommendation, leading to a strong buy consensus. Furthermore, the average 12-month price target currently sits at $12.83, indicating a potential upside of around 15% from its current value. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.